It's August 14, 2014, current time 10:48 GMT. Jay Meisler here with the daily Forex trading outlook. Now, if you look at the way this market is trading, it's basically traders are looking for reasons for the Fed and the Bank of England to raise rates, while these central banks are looking for reasons to go at their own pace and be in no rush to raise rates. So anything that changes expectations, we'll see market volatility, much needed market volatility. And in this case, following the Bank of England inflation report, sterling initially spiked up to 168.40, reversed and went lower. Second day, it's having an outside day, this time on the downside, which is more significant because, as you can see by the daily chart right here, it's in a downtrend and risking lower. You got some support here at 166.90 ahead of the 200-day moving average at 166.64. As far as the euro dollar goes, it's in the background today, continues to find support in that 133.33 to 37 range, but don't be fooled by it. Unless it can get back above at least 134, the risks still stay on the downside. And in this regard, you got to watch data coming out tomorrow, German and Eurozone's GDP. The German GDP may print a negative number for the second quarter, and that expectation by itself should keep a cap on the euro dollar upside. I've been pointing that out since the start of the week, and that has worked well. Euro dollar is currently focused on 133.50, and that's going to set the tone on the day, but it should be hard pressed to get above 133.80, or maybe even 133.70 to 80. So basically, I see a limit on the euro dollar upside today ahead of tomorrow's data. Question is, can we get rid of that invisible hand so we can go ahead and get to this 132.94 target, which has been my target since the break of 134.75. What would change this? You have to get above the 200-day moving average, 20-day moving average, which is still sloped down like a trend line. It comes in above 135, and ahead of that, as I've been pointing out, you got the 4-hour 100 period moving average comes in just above 134. As long as we stay below that and stay sloped down, I will stay negative on the euro. Now, what I like to do is find one indicator that seems to be tracking the move the best. I watch that and stick with that one, and that's the one I'm using right now. Now, if you look at the 1 hour chart, a little bit interesting. You got the 100 and 200 hour moving average is a flat, basically. 100 hours starting to tilt lower, and that comes from this consolidation between what's right now 133.33 to 134.30, which was last week's range. We've had an inside week so far, but as I said, the downside is at risk. But we have to take out this invisible hand here at 133.33. For this market to move down to that 132.94 initial target. That really sums it up right now. You got U.S. retail sales coming out today. They're supposed to be strong, so should be supportive of the dollar. But for the moment, as I said, the focus is on sterling. It's put euro dollar in the background, which you get some support out of euro sterling, but basically its downside is still at risk, as it's still, although it's consolidating so far this week. Now, if we look at this link, it's embedded right here. It's more, I call it more, on how to trade in a low volatility market, or things you can use in a low volatility market. It's a follow-up to my article. It's worked really well this week as it deals with the news and how to trade that news and how to trade ahead of the news. So I strongly suggest, if you're looking for a way to make money in this market, or at least a clue, I would suggest clicking on this link. That's it for now. Good luck, good trading, and we'll touch base tomorrow.